Hello, folks. Good to be with you again. I was on vacation, gone for a while, and missed talking to you and visiting with you. But I want to cover a very important topic this day. Okay, I want to talk about the product that we have that has a 30% bonus. 30% bonus increases your pay by 30%. This is for retirement. Okay, so I'm going to give you the highlights first. We'll go into the details. First of all, if you're 65 years old and you want to start income today, so to speak, and you have $200,000, I'm just giving you an example of the numbers. So 200,000, if you wanted to start income immediately, 200,000 would get you $14,000 a year. And that comes out to be about 7% a year. So that's what you get each year for the rest of your life. Okay? Absolutely guaranteed, absolutely safe. You can never lose money in these things, okay? They're insured, incidentally. So they're insured just like your money at the bank. Okay, so that's what you get if you started at 65 years old. Let's say you're 60 and you're going to retire in 5 years. So you're going to retire at 65. And you've got a plan at work and you're old enough now that you can take the money out. So we roll the money over into one of these private pensions, okay? And at you're 60 years old, immediately you got that bonus, and it starts growing for you. And by the time you get to be 65, you're going to get $20,000 a year for life every year. Something happens to you, you can have it arranged so your spouse, husband, or wife can get that same income for the rest of their lives. So we're talking about a big deal. Where can you get a 30% bonus, and where can you get that kind of money guaranteed each year for the rest of your life? The fact of the matter is the market's not going to do it for you. The market can never guarantee anything. All this money is tax deferred also. So if you're taking money out of savings, it's going to be tax deferred. So that means all the gains that you get in it each year cannot be taxed until you start taking income. What could be better? Of course, if it's a 401k and it's rolled over, that stays tax deferred also. So there's no taxable event until you actually start taking the income. And I can go over all these details with you, when you come in. And I hope you call us at 410-902-0464. And we're going to remind you of that a number of times. And but that's what you have. Just call us. We'd love to see you come in. I'll spend as much time as you want explaining this, and I'll give it to you in writing afterwards so that you can refer to it. Okay. Now, what are the benefits of this? First of all, we talked about the guaranteed lifetime income. You've got the growth if you want it. Delay the income. You got the guaranteed growth. You got total protection against downside risk in the market because you're not in the market. You're not in the market. And some people say, well, it's too good to be true. I'll explain how that is done, okay? And it's all to your benefit. And you're deferring taxes, as I already said. There's a death benefit, of course. So when you don't use money, you're going to have a death benefit, at the end for your spouse, unless you're taking the income, or, for whoever your beneficiaries are. Okay, so let me look at some other things I want to tell you. We mentioned guarantee flexibility. Let's say that you don't start income, but you want money each year. You can take penalty-free withdrawals. Penalty-free. You can take penalty-free money out of this product, and you can do it a number of times. You can actually even do it, excuse me, after you start income. If you need more money, we can arrange for a penalty-free withdrawal that you can take out of that money, even though you're already getting income. So there's a lot of flexibility. What if you were over 73, or depending on when you were born, it might be you're past 70 and a half, and you've got required minimum distributions coming out of your IRAs. How is that handled? It's done automatically. It's done. You sign a piece of paper and it's done automatically. And your income, generally speaking, is always greater than the required minimum distributions, the income that's coming out. So that covers the required minimum distributions. So you don't have to worry about that. It's automatically being taken care of. So that's a big advantage. You don't have to worry each year. Okay. They'll send you a notice each year. Here they'll say, here's your income, here's the income you're going to get, here's the required minimum distribution. You're already getting more income, you don't have to worry about it. And they tell you that sort of thing every year. So we say it's RMD friendly, required minimum distribution friendly. It's very simple. And so let's see. I think that pretty much covers the important points that I wanted to make to you today. Give this some thought. If this appeals to you, we use the term, retirement planning. This is a very important part of a retirement plan. You look ahead at your 401k as an example, and you're not going to retire for a while. You don't know what it's going to do. You don't know what it's going to produce. In this situation, you know exactly what you're going to have. And, I love to help you with it. Do these all the time. Been doing it for 25 years. And so give me a call, 410-902-0464. I look forward to meeting you.